Hey everyone, I have something to share with you on, yes, that's right, the GameStop is back. But we're going to go straight from the get-go. We're not going to be influenced by anything because the goal is to have y'all be able to do this educated, read the sentiment for yourself. So let's go ahead and just remove everything from this chart of GameStop. If you do want Platform X though, there is a purchase link to buy hopefully at the video. If you do, I get a small commission. Anywho. I don't need the money, but you know, never hurts to have too much. Get to donate more. So GameStop here has to do with this. Pokemon? What? What are you talking about? Pokemon? Pokemon? What? Let me talk to you and dive in deep, okay? And then we'll get into this chart analysis. So GameStop is in the grading business. What is a grade of a card? Let me actually, before we get into it, let me actually show you. So if you get a Pokemon card, right? Let's say I got one right here. This is Pikachu, okay? This card, see the corners are kind of messed up, right? Not looking great. It's kind of bended a little, right? This card would grade maybe a 4 out of 10. Maybe a 5 if we're lucky. In Gem Mint 10, a good copy, the card would be a 10. Gem Mint. It would be worth a lot more money. What GameStop has started to do is they are in the Pokemon grading business, aka the card grading business, specifically for Pokemon. And what I mean by that is this. Back during COVID, grading companies like CGC, Beckett, and PSA exploded, with some of them like CGC getting acquired. So they got bought out. So instead of just going on buying your typical video game, what you can do is you can buy graded cards and go in the shops, yes, the stores at the mall and stuff. You can actually go in and get your cards graded. So meaning you can go ahead, get your Pokemon card if you want. Let's go ahead and click on it. And you could get the card graded. There's a fee, about 15 bucks, I think all the way up to 50 bucks for that. And you can see now they have an online store. Well, the Pokemon market has exploded. Yes, of course, during COVID, but more specifically, it's had a big burst recently. How do I know this? Well, I got Pokemon here. I'm living in my 1998 nostalgic lifestyle, right? Still living back thinking I'm going to go pull PSA 10 Charizard and, be a Pokémoner and be a Pokemon master and stuff like that. I mean, it's exploding, okay? So just on this, don't think I'm crazy. I know I am. So why does this correlate to GameStop chart? Well, Beckett is the #1 grader. Those old Mickey Mantle cards and stuff like that. Their CEO just got busted for fraud. So he's gone. Boom, see ya. PSA, the company that GameStop works with, is now the leader in grading cards. They really have been. Beckett's more for baseball cards and stuff. But this is going to spell explosive growth. And I'm just going to share this with you here on GameStop because you're thinking, oh, Lord, this guy, what is he, a roaring kitty, man? Talking out his booty hole again? Look at this short float. We're at about 10% right now, 9%, which it's not as crazy. It was over 50% back in the day, but it's still high. Meaning shorts get squeezed. That is what we saw in GameStop during the whole boom, right? I mean, we all remember this euphoria. Then they did, the splits and stuff like that. But remember this? Woo, wee-hee, roller coaster ride, all the meme stock. So if you pull up implied volatility, it was sky high, right, in GameStop. Why? Because it made a big move, right? High implied volatility, high ATR, stock has historically big moves. Now, you can see it's coming up a little bit, right? Coming up pretty good. We went from pretty dead, it was going down, to now it's coming up. Why? Why is implied vol coming up? Let's go ahead and remove it because I don't want to get y'all dependent on on implied vol and stuff. I mean, it's good to look at, don't get me wrong, but I want you all to be able to think on your own. So let's go ahead and look at this chart of GameStop, right? Let's cover everything up. Let's not get distracted. Let's actually put some volume on here. Let's just add volume as a study. Equities, show, not after hours, where's volume? Show volume. Now we got volume here, okay? And I got a sticker here, so I can't even see right here on my monitor. But you can see volume exploded as shares went up. Then it kind of died down, right? So let's think about this in GameStop. Who is currently looking at GameStop to trade right now? Well, over here, it was everyone. Nowadays, not so much. Although, remember, the Roaring Kitty does have around a $300 million position. So if we look what happened, this earnings is just insane. And again, implied vol was. This earnings, you had a drop, okay? So the shorts, let's say you were short here. You're a genius. You're short here. You're a genius. You're short here. Quite frankly, you're a genius, right? You had a little squeeze here. What is that, 917, 918? And you had a rally. Oh, we just got filled in some craft. Well, I got to update that tracker. Very nice, right? Yay. Got a squeeze. Well, now, here we are building a base. And this base is looking frisky. What I mean by that is, let's look at this high. 29.79. Let's go ahead and put a little alert here. 29.79. Oh, look, we hit it and rejected on the daily. Now we're about $2 lower. What happens here when we break out of this prior high? Okay, and look too, this is a weekly chart. Look at this base we've had, okay? Right around these same levels, okay? Again, the creep of death, low volume lower, creep of death, volume lower. Break out of a base, just like we did here. What happened? Shares exploded. Shares exploded. What's going to happen now if we break out of this base? Volume starts picking up. We can explode very, very high. All the way, and you're going to think I'm crazy, 34 and change. Why is that? Well, let's just go ahead and think of the emotional factor, okay? You're short here, you're genius, you made money. Here, genius, made money. Here, short-term genius, made money. Here, 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 here. If you're short, you would be scared out of your pants. Because if you're short, you have buy stops. Where? Right here. Right here. Right here. Right here. All those buy stops get triggered. You have a quick aggressive move to the upside, and you have implied vol increasing. Therefore, if you're long call options, that implied vol is going to work to your favor. So think about that. No one's looking at GameStop. Are the options juicy? You're darn right they are. Why could the options be juicy? Because market makers know we could see a big implied move. The next earnings event isn't till, well, that's why, December 5th. So implied vol, next week, you see how it's cheap? December 6th, implied vol goes up. The option prices basically go up $1. So therefore, if you want to trade GameStop, you could be a short-term degenerate, like I am, 99% of the time. Look at December 6th calls. Implied vol will go up, therefore the prices will go up even if the stock stays flat. Yeah, you'll have some time decay, not much because earnings. But what I think you want to do to trade it is I think you want to get frisky. Let's look at the news flow scanner really quick. Because I personally, I'm going to get friskier than, I don't know, I'm trying to think of someone frisky without getting canceled. I'm going to get very frisky. We'll put it that way. I want to get friskier than I don't want to say names. I want to get friskier than the friskiest. Okay? Like I'm 8 tequila shots deep on a cruise, and I got Miss Marianne from American Pie, a cougar, saying, "Come and get me." And I say, "Let's go to the disco, baby." That's what I want. And if we look at the flow in GameStop, this is using the news flow scanner, which might be available to purchase. Bull, 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 bull. Now, obviously, some of these expired. But look at this degenerate trader building a position for April. April 2025. This ain't no little itty bitty trader out there like me. Yeah, I know I'm a little itty bitty trader. I know, make fun of me. I am nowadays. I am. This is a big dog. So let's go to April. Let's go far out the money, because who wants high probability? Not me. Look at these calls and open interest. April 40, 41s, 45, 50s. If you want to get a complete frisky with it, oh my God. Okay, the market makers are not playing. You got a 5, we'll call it a $6 move for earnings for December 6th. So December 6th, you got a $6 move. Stock's at 28 plus 6, that equals what? 34. 34 calls are $1.50. They should be like under $1, but you know, we'll be kind, okay? We'll be very kind. If you want to get frisky though, and you can see the market makers, they have jacked up options all the way. What I think you do actually in GameStop, so if you get a greater than market makers expected move, wow, I mean, these are jacked. I think there's two ways. One, you could just buy at the money calls, pay $260-ish for them, and your break even will be 27.5 plus two, let's just say 250. So that'd be what, 30 bucks? So your break even's 30 bucks. Or you look for a massive squeeze, and this is for the true big players out there. You look for a massive squeeze, and you go so far. I don't think you do that actually. I think you just play like the 27.5 calls. I mean, honestly, you could even buy in the money calls for higher probability. And I just think you hope for a greater than expected move. Let's say you get a $10 move. And again, this is crazy. Okay, and that's what I want. This is why you're trading it. But let's say you get a $10 move, 38 bucks. Those 30 calls go from 2 bucks to 8 bucks. It's not bad. But let's say you really think the squeeze lasts. And this is kind of, look at this. I think we might have found something. Let's say you think the squeeze lasts. I think you can honestly go to January and buy like the 27, 28 calls. Because even if you buy the 60 calls, you're paying $250, $245. This would take shares at 50 bucks. IV is going to start implying a $10 at the money move. Buy the 50 calls for 280, 290. They'll be marking 10 bucks or so. Personally, and I'm talking myself out of being crazy, I think you just buy at the money calls in GameStop. January, if you want to pay more, earnings December 6th. And I think even if you get a squeeze on earnings December 6th, maybe you take a long stock and ride it. I'm telling you, GameStop has the potential for a massive squeeze. There's a reason why the options are so expensive. And don't be shocked if you see these prices again. Do not be shocked. It happened in Carvana. It's happened time and time again in stocks.